Are you tired of constantly checking your stock's performance and wondering if you made the best investment decisions? What if you could more confidently predict your returns and have a defined exit strategy other than buy right and hope that you sell at the peak? Do you want greater certainty in your investments? So, in this video, I'm going to tell you the missing factors in mainstream investments that are causing you unnecessary stress. Hi, my name is Garrett Lynch, and I help people become financially free with passive real estate investments. Are you investing in any stocks right now? If so, what's your actual exit strategy? Just buy low and sell high and hope for the best? So the issue with stocks and even precious metals and things like crypto is that there's not really a defined exit strategy at all. It's based on investor moods and emotions. It even rides on consumer feelings and things that you just don't control at all. This is super frustrating because you just have anxiety over investments that you have no control over, and you're constantly watching your investments. You're constantly monitoring it, checking in, logging your account, see what it's worth. Think about the emotions you feel when it's down and how all the things that happen, how stressed you are when you see your 401k or your IRA go down in the dumps. It's a big problem. So I actually had the same problem and I tried to solve it and was unsuccessful in a few of my attempts. So the first thing I tried doing was investing in a company I really felt strongly about, like Tesla. And the issue was that the stock just fluctuated up and down so often. So I put a bunch of money into that one stock. And people say, yeah, you need to invest in a portfolio. But that was moving too slow for me, but this was moving too fast. So I put money in. I'd watch it fluctuate thousands of dollars every day, up and down, up and down. I couldn't stop monitoring. I couldn't stop watching it. I felt like I was at the casino. And eventually I just sold out of that at a slight loss and just I couldn't take it. I mean, in hindsight, that was a bad move because it went up a ton since then. But at the time, I couldn't even deal with it. Couldn't deal with the swings of that specific stock and investing in it. So I was like, you know what, this doesn't work. Let me try to do something else. So I'm gonna go and I'm gonna invest in Amazon stores. That seems to be a common thing. Okay, this seems like a good passive way. It makes a ton of sense. You get something from China, you sell it on Amazon to people in the US, you mark it up. Makes a ton of sense. There's a lot of people that do this thing where they'll set up the store for you and they'll do everything. And rarely does that actually work out. If you look at the data on Amazon stores, there's only a very, very small percentage, like under 1%, that are actually making a decent amount of money, like over 100,000 from their Amazon stores. So there's a ton of issues with Amazon changing the rules, and they are the one that really benefit from those types of things. So while there are some successful people out there that do that, I found that was not the way forward. I also tried my hand in crypto, and that was a really tough thing to deal with as well, because you had the similar thing that happened to me with Tesla, but the swings were harder and faster and they hurt more. It was fun while it was going up, but really painful as it was going down. Also, I mean, fix and flips seems pretty straightforward, but you can really lose a lot of money if you don't really manage your construction project well, or you don't set things up properly where you know exactly what your margin is. You also can have issues with the contractors. You can have issues with when you go to sell it where the market's at. So there are issues when it comes to fix and flips too. It's just basically rotating dollars and hoping that you can come out ahead. So those pursuits really made me feel like, I didn't know what I was doing. I was like, how do I multiply my money? I mean, it's a tough thing to figure out when you think about it. Not everybody knows what to do. So then I did something that worked. Finally came across a solution that had a predictable exit strategy, and it made me feel like I had more control. The basics around the investments are the same as any other. There's real supply and demand, but there's reduced stress, more predictable returns, a defined exit strategy, and the ability to reliably plan for major life events. So the great thing about defined exit strategies is that they give you better certainty. So I found multifamily syndications to be the perfect solution. You invest into a real asset. The asset has controls and levers that you can pull to make it worth more money, like renovating the units and upping the rent, very straightforward, or upgrading the amenity package. There's different things, improving the management. These things are all levers that you can pull if you have the experience on how to do it. Or if you don't, you just partner with someone that does. They do all the work for you, and then you reap the benefits of it. They have actual defined exit strategies, whether it's buy and hold for 5 years or refinance in year 4 and exit in year 7. You can actually predict. Anyone that's doing this model is predicting these things in advance. They already know exactly what this could look like. And then the returns are just more predictable. I mean, you're inside a hard asset. You have levers that you can pull, and the market just moves a lot slower than that of the stock market and of crypto and other areas like that. So I'm going to give you an example of this is how this worked for us one time and multiple times, honestly, but this one stands out. So we bought a apartment complex that people all were looking at this and they were really worried about it. They're like, there's a lot of renovations to do here, a lot of things that need to happen, and there were about 20 people that were interested in this deal, and we actually ended up doing it. We budgeted about $2.5 million for renovations. We put the money into this deal. We bought it at about an $18 million basis, and that property is now worth upwards of $30 million. So a real amazing effort there. The market has been super strong, and we were able to just renovate units and increase rents along with the market conditions in this specific submarket. It turned out to be an amazing success, and we were able to refinance it, give investors back a portion of their money, and then continue to cash flow it so they still receive checks even though their basis is lower on it. We were able to return their capital back. So it's really a cool vehicle. And at the same time, they have great tax benefits through depreciation, all the while they're building their equity position and they're getting checks every quarter. So this investment strategy really changed things. And we have the defined exit strategies in place on this one. So if you want more details on the pros and cons of stock market investing versus real estate investing, you can check out our free ebook at themichaelblock.com/report. It's called What's the Best Investment, Stock Market or Real Estate? And there's cold hard numbers in there. There's historical performance, so you can make the best decision for yourself. Also, if you want to just invest alongside the pros and you're ready to go, or maybe you just want to get more information, reach out to us at nighthawkequity.com. Click the Join the Investor Club button and set up a call with us to see if investing into an apartment complex alongside the pros, aka us, is the right move for you. Thanks so much, guys. We'll catch you guys next time.